Are you ready to tackle the WGU D105 Objective Assessments for Intermediate Accounting? Look no further. Our webpage. You will find a unique list of questions and answers designed to assist you in passing the D105 course. In this video, we will cover questions from revenue recognition, contract accounting, lease accounting, financial reporting, and tax accounting. So, let's get started. 1. On January 1st, 2021, Wootton Technology Associates sold equipment for $10,000, with payment due on December 31st, 2021. If the time value of money is considered and the interest rate is 8%, how much sales revenue is recognized on January 1st, 2021? A. $10,000. B. $9,259. C. $8,800. D. $9,000. What do you think is the answer? Correct answer. B. $9,259. Explanation. Wootton Technology recognizes the sales revenue on January 1st, 2021, considering the time value of money. The payment of $10,000 is discounted using an 8% interest rate. The present value calculation of $10,000 using an 8% interest rate for 1 year results in $9,259, which is the amount recognized as revenue on January 1st. 2. Long Construction Corporation began construction under a 3-year contract in 2021. The contract price is $2,100,000, and Long recognizes revenue over time using the percentage of completion method. What was the cost of construction incurred in 2021? A. $150,000. B. $125,000. C. $143,000. D. $108,000. Do you know the answer? Correct answer. B. $125,000. Explanation. The cost of construction actually incurred in 2021 is calculated based on the percentage of completion for revenue recognition. The financial statement shows income of $25,000 and billings of $143,000, from which the actual cost of construction can be derived as $125,000. 3. How much cash was collected in 2021 by Long Construction Corporation on the 3-year contract? A. $125,000. B. $108,000. C. $143,000. D. $150,000. Can you guess the answer? Correct answer. B. $108,000. Explanation. The cash collected on the contract is shown as $108,000, which reflects the amount of cash received from construction progress billings. 4. What was the estimated cost to complete as of the end of 2021 for Long Construction Corporation's 3-year contract? A. $150,000. B. $108,000. C. $1,625,000. D. $1,200,000. What do you think is the answer? Correct answer. C. $1,625,000. Explanation. The estimated cost to complete the contract is calculated based on the progress made and the total expected costs, which is $1,625,000 at the end of 2021. 5. What was the estimated percentage of completion used to calculate revenue in 2021 for Long Construction Corporation? A. 5.14%, B. 7.14%, C. 10%, D. 12%. Do you know the answer? Correct. Answer. B. 7.14%, Explanation. The percentage of completion is calculated by dividing the cost incurred in 2021 by the total estimated cost of the project. The resulting percentage is 7.14%. 6. Finally, corporation ships cosmetics to independent distributors. It is unsure if the distributors can sell a new line of cosmetics and is committed to accepting returns. How much revenue should finally recognize upon delivery? A. $740,000. B. $370,000. C. $0. D. $100,000. Can you guess the answer? Correct answer. C. $0. Explanation. Because finally is unsure if the cosmetics can be sold and is committed to accepting returns. No revenue should be recognized upon delivery. The revenue will be recognized when it becomes probable that the sales will not be reversed. 7. What is the amortized cost? A. Acquisition cost adjusted for amortization of discount or premium. B. Fair value of an asset. C. Historical cost minus depreciation. D. Replacement cost. What do you think is the answer? Correct answer. A. Acquisition cost adjusted for amortization of discount or premium. Explanation. Amortized cost refers to the acquisition cost of an asset, adjusted for the amortization of any discount or premium, where applicable. 8. What is the asset-liability approach? A. Recognizing and measuring revenue based on changes in assets and liabilities. B. Measuring assets at fair value. C. Recognizing revenue only when cash is received. D. Recording assets and liabilities at historical cost. Do you know the answer? Correct answer. A. Recognizing and measuring revenue based on changes in assets and liabilities. Explanation. The asset-liability approach involves recognizing revenue based on changes in assets and liabilities, rather than purely on the cash received. 9. What is an assurance-type warranty? A. A warranty providing additional services beyond the agreed-upon specifications. B. A warranty ensuring the product meets the agreed-upon specifications at the time of sale. C. A warranty that provides post-sale customer support. D. A warranty that guarantees product replacements for any reason. Can you guess the answer? Correct answer. B. A warranty ensuring the product meets the agreed-upon specifications at the time of sale. Explanation. An assurance-type warranty guarantees that the product meets the agreed-upon specifications at the time of sale, as opposed to providing any additional services. 10. What are available-for-sale securities? A. Securities bought and held primarily for sale in the short term. B. Securities classified neither as held to maturity nor trading. C. Securities held for indefinite future sale. D. Securities sold within the next 3 months. What do you think is the answer? Correct answer. B. Securities classified neither as held to maturity nor trading. Explanation. Available-for-sale securities are those not classified as held to maturity or trading securities. These are typically debt or equity securities, expected to be sold in the medium to long term. 11. What is a bargain purchase option, 𝗬𝗵𝗶𝗀? A. An option that allows the lessee to purchase the leased asset at fair market value. B. An option allowing the lessee to purchase the asset for a price significantly lower than the asset's expected fair value at the exercise date. C. An option allowing the lessee to renew the lease at market rates. D. An option allowing the lessee to sell the asset at the end of the lease. Do you know the answer? Correct answer. B. An option allowing the lessee to purchase the asset for a price significantly lower than the asset's expected fair value at the exercise date. Explanation. A bargain purchase option, BPO, gives the lessee the right to purchase the leased asset at a price significantly lower than its expected fair value at the exercise date, incentivizing the purchase at the end of the lease term. 12. What is a bill and hold arrangement? A. A contract where a customer purchases goods, but the seller retains physical possession until the customer requests delivery. B. A contract where the customer receives goods and pays for them later. C. A contract where the seller delivers goods but retains legal ownership until payment is made. D. A contract where goods are delivered immediately and payment is made after inspection. Can you guess the answer? Correct answer: A. A contract where a customer purchases goods, but the seller retains physical possession until the customer requests delivery. Explanation: a bill and hold arrangement allows the seller to bill the customer for a product, but the seller retains physical possession until a later date, usually until the customer requests delivery. 13. What is a billings account? A. An account used to record cash receipts from customers. B. An account used to record payments made to suppliers. C. An account used under the percentage of completion method to avoid double counting inventory. D. An account used to track overdue payments. What do you think is the answer? Correct answer: C. An account used under the percentage of completion method to avoid double counting inventory. Explanation: under the percentage of completion method, a billings account is used to subtract billings on the construction contract from construction in process to avoid double counting inventory. 14. What is a change in accounting principle? A. Changing from one generally accepted accounting principle to another. B. Changing financial reporting from cash basis to accrual basis. C. Adjusting financial estimates due to new information. D. Changing accounting for income taxes. Do you know the answer? Correct answer: A. Changing from one generally accepted accounting principle to another. Explanation: a change in accounting principle occurs when a company switches from one generally accepted accounting principle, or GAAP, to another, such as switching from FIFO to LIFO for inventory accounting. 15. What is a change in accounting estimate? A. Changing from one generally accepted accounting principle to another. B. Adjusting an estimate due to new information or additional experience. C. Restating prior period financial statements. D. Changing the reporting entity. Can you guess the answer? Correct answer: B. Adjusting an estimate due to new information or additional experience. Explanation: a change in accounting. Estimate occurs when new information or additional experience prompts a company to revise its previous estimates, such as revising the useful life of an asset. 16. What is collectibility? A. The ability to collect payments from customers as outlined in the contract. B. The risk that customers will pay late. C. The ability to collect cash from suppliers. D. The cost associated with collecting overdue payments. What do you think is the answer? Correct answer: A. The ability to collect payments from customers as outlined in the contract. Explanation: collectibility refers to the risk or likelihood that the customer will be able to pay the amount of consideration as stipulated in the contract. 17. What is the completed contract method? A. Accounting for long-term construction contracts where revenues and gross profit are recognized only when the contract is completed. B. A method of accounting that recognizes revenue at different stages of completion. C. A method where revenue is recognized at the time of billing. D. Accounting for contracts by recognizing revenues and gross profit periodically. Do you know the answer? Correct answer: A. Accounting for long-term construction contracts where revenues and gross profit are recognized only when the contract is completed. Explanation: the completed contract method defers revenue recognition until the completion of the contract, as opposed to recognizing revenue as work progresses. 18. What is a consignee? A. The party that ships goods to a consignee under consignment. B. The party that receives goods from a consignor under consignment. C. The party that purchases goods directly from the manufacturer. D. the party that finances the sale of consigned goods. Can you guess the answer? Correct answer. B. The party that receives goods from a consignor under consignment. Explanation. A consignee is the party that receives goods from the consignor with the responsibility to sell them on behalf of the consignor. 19. What is a consignment? A. A direct sale between a manufacturer and retailer. B. A sale where goods are shipped directly to the customer. C. An arrangement where the consignor ships goods to a consignee to sell on their behalf. D. A long-term contract to supply goods over time. What do you think is the answer? Correct answer. C. An arrangement where the consignor ships goods to a consignee to sell on their behalf. Explanation. Consignment refers to an arrangement where a consignor sends goods to a consignee who acts as an agent to sell the goods. 20. What is a contract asset? A. The physical goods shipped to a customer. B. An unconditional right to receive payment because a performance obligation has been satisfied. C. A liability for goods received but not yet paid for. D. An asset representing the value of goods sold on credit. Do you know the answer? Correct answer. B. An unconditional right to receive payment because a performance obligation has been satisfied. Explanation. A contract asset represents the company's unconditional right to receive consideration because it has satisfied a performance obligation, but the payment is conditional on fulfilling additional obligations. 21. What is contract liability? A. The amount owed to suppliers for goods received. B. A company's obligation to transfer goods or services to a customer for which the company has received consideration. C. A deferred tax liability. D. An asset that will be realized once performance obligations are met. Can you guess the answer? Correct answer. B. A company's obligation to transfer goods or services to a customer for which the company has received consideration. Explanation. A contract liability refers to the company's obligation to provide goods or services to a customer after having received payment in advance, commonly known as unearned revenue. 22. What is a contract modification? A. Changing the legal terms of a contract before signing. B. An amendment to the contract terms after the contract has been signed. C. The cancellation of a contract. D. A change in the customer's payment terms. What do you think is the answer? Correct answer. B. An amendment to the contract terms after the contract has been signed. Explanation. A contract modification occurs when the terms of an ongoing contract are changed, such as changes to pricing, scope of work, or timelines. 23. What is a contributory pension plan? A. A pension plan where the employer bears the entire cost of benefits. B. A pension plan where the employees bear part of the cost of the benefits. C. A pension plan where employees receive bonuses. D. A pension plan managed solely by the government. Do you know the answer? Correct answer. B. A pension plan where the employees bear part of the cost of the benefits. Explanation. A contributory pension plan requires employees to contribute toward the cost of the pension benefits they will receive upon retirement. 24. What is controlling interest? A. A non-voting stake in a company. B. When one company acquires more than 50% of another company's voting interest. C. When one company holds less than 20% ownership in another company. D. When two companies merge into one legal entity. Can you guess the answer? Correct answer. B. When one company acquires more than 50% of another company's voting interest. Explanation. Controlling interest refers to owning more than 50% of the voting stock of another company, giving the controlling company the ability to influence decisions. 25. What is cost-to-cost basis? A. The total cost of goods sold in a retail operation. B. A method of estimating progress towards completion by comparing costs incurred to date with the total estimated costs required to complete the contract. C. The process of pricing inventory at cost. D. A method of calculating depreciation on long-term assets. What do you think is the answer? Correct answer. B. A method of estimating progress towards completion by comparing costs incurred to date with the total estimated costs required to complete the contract. Explanation. Cost-to-cost basis is used in the percentage of completion method to estimate the percentage of work completed on a contract by comparing incurred costs to the estimated total costs. 26. What are counterbalancing errors? A. Errors that require a complete revaluation of all assets. B. Errors that will self-correct over 2 accounting periods. C. Errors that will never self-correct. D. Errors that occur when there is a mistake in depreciation calculations. Do you know the answer? Correct answer. B. Errors that will self-correct over 2 accounting periods. Explanation. Counterbalancing errors are accounting errors that correct themselves over 2 periods, such as errors in recognizing revenue or expenses. 27. What is the cumulative effect of an accounting change? A. The effect of a change in accounting method on future income only. B. The difference in prior year's income between the newly adopted accounting method and the prior method. C. A change in management's financial reporting strategy. D. A one-time adjustment made to balance the books after an error. Can you guess the answer? Correct answer. B. The difference in prior year's income between the newly adopted accounting method and the prior method. Explanation. The cumulative effect refers to the total difference in income between what was reported under the old accounting method and what would have been reported if the new method had always been used. 28. What is a current tax expense? A. Income tax paid on future taxable income. B. Income tax payable for the current year. C. Income tax that is deferred for future periods. D. Income tax related to previous year's earnings. What do you think is the answer? Correct answer. B. Income tax payable for the current year. Explanation. The current tax expense is the amount of tax that is payable or refundable for the current year, determined by applying tax law to the taxable income for the year. 29. What are debt securities? A. Securities representing ownership interest in a company. B. Securities that represent a creditor relationship with an entity, such as bonds and government securities. C. Securities that provide a fixed dividend to shareholders. D. Securities issued by startups. Do you know the answer? Correct answer. B. Securities that represent a creditor relationship with an entity, such as bonds and government securities. Explanation. Debt. Securities represent a creditor relationship with an enterprise and include instruments like bonds, municipal securities, and convertible debt. 30. What is a deductible temporary difference? A. Differences between book income and taxable income that result in taxable amounts in future years. B. Differences between book income and taxable income that result in deductible amounts in future years. C. Differences between book value and fair value. D. Differences between the market value and purchase price of securities. Can you guess the answer? Correct answer. B. Differences between book income and taxable income that result in deductible amounts in future years. Explanation. A deductible. Temporary difference occurs when there are timing differences that will result in future deductions for tax purposes when recovering or settling the related asset or liability. Struggling with your WGU exams? We've all been there. Welcome to OAExams.com, your ultimate resource for WGU success. Find over 15,000 plus questions and answers. Join our thriving community of over 10,000 active WGU students and an impressive 100% success rate with our premium exam support. Visit OAExams.com today and take the first step toward guaranteed success. 31. What is a deferred tax asset? A. The amount of tax that will be paid in future periods. B. The deferred tax consequences attributable to deductible temporary differences and carry forwards. C. Tax expenses related to the current year. D. Taxable income reported in the financial statements, but not yet paid. What do you think is the answer? Correct answer. B. The deferred tax consequences attributable to deductible temporary differences and carry forwards. Explanation. A deferred tax asset arises from deductible temporary differences or tax credits that can be used to reduce future tax liabilities. 32. What is deferred tax expense? A. The amount of taxes owed in future periods. B. The amount of tax deferred from previous years that must be paid in the current year. C. The increase in the deferred tax liability balance from the beginning to the end of the accounting period. D. The tax owed on temporary differences in revenue. Do you know the answer? Correct answer. C. The increase in the deferred tax liability balance from the beginning to the end of the accounting period. Explanation. Deferred tax expense is the increase in the deferred tax liability balance over the accounting period, reflecting future taxes owed due to temporary differences in recognizing income or expenses. 33. What is a defined benefit plan? A. A pension plan, where the employer contributes a fixed amount to a pension fund. B. A pension plan where the employee bears all the risk of investment performance. C. A pension plan where the benefits to be received by the employee upon retirement are defined. D. A pension plan that offers tax incentives but no guaranteed payout. Can you guess the answer? Correct answer. C. A pension plan where the benefits to be received by the employee upon retirement are defined. Explanation. In a defined benefit plan, the benefits that employees will receive upon retirement are predetermined based on factors like years of service and salary levels. 34. What is a defined contribution plan? A. A pension plan where the employer contributes a specific sum each period based on a formula. B. A pension plan where benefits are guaranteed upon retirement. C. A pension plan where the government matches employee contributions. D. A pension plan where the employee contributes the entire amount. What do you think is the answer? Correct answer. A. A pension plan where the employer contributes a specific sum each period based on a formula. Explanation. A defined contribution. Plan is a pension plan where the employer agrees to contribute a set amount each period, typically based on factors like salary and years of service, but does not guarantee the benefit amount at retirement. 35. What is the effective tax rate? A. The total tax liability divided by taxable income. B. The total income tax expense for the period divided by pre-tax financial income. C. The tax rate applied to future income. D. The tax rate for the highest income bracket. Do you know the answer? Correct answer. B. The total income tax expense for the period divided by pre-tax financial income. Explanation. The effective tax rate is calculated by dividing the total income tax expense for the period by the pre-tax financial income, providing insight into the average rate at which the company is taxed. 36. What is the equity method of accounting for investments? A. A method where the investment is valued at fair market value. B. A method where the investment is valued based on the investor's proportionate share of the investee's earnings or losses. C. A method where the investment is only recorded when dividends are received. D. A method where the investment is held until maturity. Can you guess the answer? Correct answer. B. A method where the investment is valued based on the investor's proportionate share of the investee's earnings or losses. Explanation. The equity method adjusts the value of the investment by the investor's share of the investee's profits or losses, and the investment's value is reduced by any dividends received. 37. What are equity securities? A. Securities representing debt obligations of a company. B. Securities representing ownership interest in another corporation. C. Securities that pay a fixed interest rate. D. Securities issued by the government. What do you think is the answer? Correct answer. B. Securities representing ownership interest in another corporation. Explanation. Equity securities represent ownership interest in another company, such as common or preferred stock. 38. What are errors in financial statements? A. Mistakes caused by changes in accounting principles. B. Mistakes in the application of accounting principles or oversight of information. C. Mistakes caused by external auditors. D. Mistakes corrected in future periods. Do you know the answer? Correct answer. B. Mistakes in the application of accounting principles or oversight of information. Explanation. Errors in financial statements result from mathematical mistakes, misuse of facts, or incorrect application of accounting principles at the time financial statements were prepared. 39. What is fair value? A. The value of an asset based on its historical cost. B. The amount at which an asset could be exchanged between willing parties in an orderly transaction. C. The book value of an asset minus depreciation. D. The amount an asset could be sold for in a forced liquidation sale. Can you guess the answer? Correct answer. B. The amount at which an asset could be exchanged between willing parties in an orderly transaction. Explanation. Fair value is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants. 40. What is a finance lease? A. A lease that transfers ownership of the asset to the lessee. B. A lease where the lessee recognizes the right to use an asset and a corresponding liability. C. A lease where the lessee makes monthly payments and retains ownership. D. A lease where the lessor retains all risks and rewards. What do you think is the answer? Correct answer. A. A lease that transfers ownership of the asset to the lessee. Explanation. A finance lease transfers control or ownership of the asset to the lessee, who recognizes interest expense on the lease liability and amortization on the right-to-use asset. 41. What are financing activities? A. Activities that involve long-term assets. B. Activities that involve liability and equity, such as issuing debt or repurchasing stock. C. Activities that involve selling inventory and collecting receivables. D. Activities that involve obtaining credit from suppliers. Do you know the answer? Correct answer. B. Activities that involve liability and equity, such as issuing debt or repurchasing stock. Explanation. Financing activities include transactions that affect liabilities and equity, such as issuing bonds, repurchasing stock, or paying dividends. 42. What is the full disclosure principle? A. The principle that companies should disclose only material information. B. The principle that companies must disclose all relevant financial information to users of the financial statements. C. the principle that requires companies to disclose financial statements annually. D. The principle that companies should disclose information to regulatory bodies only. Can you guess the answer? Correct answer. B. The principle that companies must disclose all relevant financial information to users of the financial statements. Explanation. The full disclosure principle mandates that companies provide all information necessary for users of the financial statements to make informed decisions. 43. What is a guaranteed residual value? A. The amount the lessee must pay if the asset's residual value is lower than expected. B. The value of the asset guaranteed by the lessor at the end of the lease. C. The amount the lessee expects to receive if they purchase the asset. D. The guaranteed fair value of the asset at the start of the lease term. What do you think is the answer? Correct answer. A. The amount the lessee must pay if the asset's residual value is lower than expected. Explanation. A guaranteed residual value is the amount the lessee is obligated to pay at the end of the lease term if the actual residual value is less than the guaranteed amount specified in the lease agreement. 44. What are held-to-maturity securities? A. Securities that a company holds for trading purposes. B. Securities that the company intends and has the ability to hold until maturity. C. Securities that must be sold within 3 months. D. Securities held by the government. Do you know the answer? Correct answer. B. Securities that the company intends and has the ability to hold until maturity. Explanation. Held-to-maturity securities are debt securities that a company intends to hold until they mature, rather than selling them in the short term. 45. What is holding gain or loss? A. The difference between the purchase price and sale price of a security. B. The net change in the fair value of a security from one period to another, excluding dividend or interest income. C. The income received from holding a stock for a long period. D. The capital gain or loss from selling an investment. Can you guess the answer? Correct answer. B. The net change in the fair value of a security from one period to another, excluding dividend or interest income. Explanation. Holding gain or loss refers to the change in the fair value of a security over time, not including income earned through dividends or interest. 46. What is the implicit interest rate in a lease? A. The interest rate stated in the lease agreement. B. The discount rate that equates the present value of the lease payments with the fair value of the asset. C. The interest rate applied to variable payments in the lease. D. The interest rate charged by the lessor's lender. What do you think is the answer? Correct answer. B. The discount rate that equates the present value of the lease payments with the fair value of the asset. Explanation. The implicit interest rate in a lease is the discount rate that, when applied to the lease payments, results in a present value equal to the fair value of the leased asset. 47. What is the incremental borrowing rate in a lease? A. The interest rate charged by the lessor. B. The interest rate a lessee would incur to borrow funds over a similar term. C. The interest rate the lessor applies to deferred payments. D. The interest rate the lessee applies to early payments. Do you know the answer? Correct answer. B. The interest rate a lessee would incur to borrow funds over a similar term. Explanation. The incremental borrowing rate is the rate of interest the lessee would pay if they were to borrow the necessary funds to purchase the asset rather than lease it. 48. What is the indirect method in a statement of cash flows? A. A method that starts with cash received and adjusts for non-cash items. B. A method that adjusts net income for items that affect reported income but not cash. C. A method that lists all cash inflows and outflows in chronological order. D. a method that only lists operating activities. Can you guess the answer? Correct answer. B. A method that adjusts net income for items that affect reported income, but not cash. Explanation: the indirect method of preparing a statement of cash. Flows adjusts net income for non-cash transactions and changes in working capital to derive cash from operating activities. 49. What are input measures? A. Measures of the number of hours worked by employees. B. Measures of the costs incurred and efforts devoted to a project under the percentage of completion method. C. Measures of the efficiency of a company's production processes. D. Measures of the quality of finished goods. What do you think is the answer? Correct answer. B. Measures of the costs incurred and efforts devoted to a project under the percentage of completion method. Explanation: input. Measures under the percentage of completion method assess the costs and efforts incurred during a project to determine the extent of progress made toward completion. 50. What are investing activities? A. Activities that involve liability and equity. B. Activities that involve acquiring and disposing of long-term assets. C. Activities that involve selling products and collecting receivables. D. Activities that involve making short-term investments. Do you know the answer? Correct answer. B. Activities that involve acquiring and disposing of long-term assets. Explanation: investing activities include acquiring and disposing of investments and long-term productive assets, such as buying or selling property, equipment, or securities. You've reached the end of our first question set for the complete exam preparation experience. Visit us at OAExams.com, where you'll find thousands more practice questions and comprehensive study guides. Thanks for studying with us today. See you in the next video.